Welcome to the deep dive. We sift through curated sources to pull out the crucial insights on complex topics, basically doing the heavy lifting so you don't have to.
Think of it as your efficiency boost for staying informed.
Exactly. And today we're diving into Gulf Energy Development Public Company Limited, GULF. We've got their latest annual report, some news analysis.
That's right. We've got the 2024 Form 56-1-1 report, a piece from Tunman on GULF buying more KBANK shares, and interestingly, a couple of articles looking at a potential Trump visit to the Gulf region.
Okay, quite a mix. So our mission today, to really distill what's key about GULF's recent performance, where they're heading next, and maybe some of these external pressures or influences.
Yep. We'll look at the numbers, the strategy, energy, digital, all that, and then zoom out a bit to the geopolitical context. Get you the essentials fast.
All right, let's get straight into it. The 2024 report. What does it tell us about how GULF did recently? Maybe start with the backdrop, the Thai banking system. How's that looking?
Well, according to the Bank of Thailand's Q4 2024 take, the system was pretty resilient. Good capital levels, decent loan loss provisions, enough liquidity, generally stable.
Okay, a solid foundation then.
Yeah.
And lending, what was happening there?
Loan growth actually contracted a tiny bit, 0.4% year on year in Q4, but that was better than the quarter before. Big companies were borrowing more.
And SMEs, consumers.
SME loans also contracted, but less sharply. Consumer loans, though, especially for cars, kept falling. Seems like structural issues and slow income recovery were still biting there.
Okay, what about the bank's health itself? NPLs, non-performing loans.
Actually, good news there. NPLs decreased in Q4. The overall ratio dipped to 2.78%.
Oh, interesting. Why was that?
Mainly driven by business loans. Looks like banks were actively managing their portfolios, helping out with debt, and also reclassifying some restructured loans.
You mentioned Stage 2 loans increased, though.
Yeah, Stage 2, that's where credit risk has noticeably increased, but isn't quite an NPL yet. That rise was linked to some, let's say, qualitative judgments in how business loans were classified.
So a bit nuanced, but overall asset quality trended positively.
Exactly. Fewer actual bad loans, even if there's a watch list category, Stage 2, that grew a bit. Banks seemed profitable, too, in 2024, helped by non-interest income and lower provisioning needs.
Right. A stable environment. So turning specifically to GULF.
Yeah.
How did their top line look in 2024?
GULF saw total revenue climb 6.5% year on year, reached about THB 124.6 billion.
And what drove that growth?
Mostly their core gas-fired power business. That part grew 7.0%, hitting THB 111 billion. So energy is still very much the engine room.
What specifically pushed the power revenue up? New plants?
Yeah, two main things. Units 3 and 4 of their GPD project started commercial operations, so new income streams. Plus, the GSRC project sold more electricity because, well, Thailand used more power.
Makes sense. More capacity, more demand, more revenue. What about their other businesses? Satellites?
That was a different story. Satellite revenue actually fell by 8.1% in 2024, down to THB 2.4 billion.
Why the drop there?
Seems customers in places like Malaysia and Indonesia weren't using the service as much, in areas the new satellite doesn't cover so well. And there was also some lower domestic revenue during a contract transition. Shows diversification has its ups and downs.
Okay, let's talk costs. Did their expenses rise with the revenue?
Finance costs definitely did, up 13.0% to around THB 11.1 billion.
And that was due to?
Mainly interest on new debt debentures they issued, and also interest kicking in for those new GPD power units once they started operating. Plus, they had a bit of an unrealized loss on foreign exchange, about THB 676 million.
Currency swings.
And
bad, getting stronger.
Yeah, strengthening against the euro and the British pound, mainly. That can definitely impact the bottom line when you have international dealings or debt.
And overall debt levels, how are they managing that?
Their key ratio, net interest-bearing debt to equity, including leases, was 1.80 times at year-end 2024.
How does that compare to their limits?
Comfortably below. Their bond covenant allows up to 3.57 times, so plenty of headroom there. The total debt-to-equity ratio was 2.23 times.
So they're borrowing to grow,
Yeah.
but keeping leverage in check, according to their agreements.
Pretty much, yeah. Seems manageable.
Okay, so performance-wise, solid overall growth led by power, some softness in satellites, rising finance costs, but manageable debt. Now let's shift focus. What about the future? What are their plans according to the report?
Big plans. The report really emphasizes expansion across energy, logistics, and digital infrastructure. They're framing it around supporting a low-carbon future, renewables and advanced tech.
Renewables are key everywhere. Any specific targets GULF has set?
Yes, they're aiming to get almost 600 milliW of solar power operating soon. That includes things like solar rooftops, solar farms, some with battery storage, too.
And this aligns with Thailand's plans.
Absolutely. It fits right into the National Power Development Plan and the government's renewable energy programs. So they're positioning themselves well within that policy framework.
You mentioned digital infrastructure, too. That
Yeah.
sounds like a significant move beyond just energy.
It really is. They're making some, pretty substantial bets in digital. Partnerships are key here. They're building data centers.
Right.
They've got a digital asset exchange, Gulf Binance, operating under Binance TH, and they're getting into cloud services, both public and sovereign cloud.
Sovereign cloud.
Yeah, and interestingly, they've partnered with Google for a unique air-gapped cloud service that suggests they're targeting high-security clients, maybe government or critical infrastructure. It's quite ambitious.
Wow. Okay, so a serious diversification.
Right.
What about their existing stakes in telco and satellites?
Yeah.
AD Vancy and THCom.
Still growing there, too, through ongoing investment. It looks like a strategy to kind of merge energy and digital, recognizing how linked those sectors are becoming.
And there was that INTCH amalgamation mentioned. What's the thinking behind merging GLF and INTCH?
Right. That got approved late 2024, expected to wrap up Q2 2025. Officially, it's about streamlining the structure, boosting efficiency, optimizing capital.
And didn't the Tunman article suggest this was about consolidating control over AIS?
Exactly. Tunman framed the initial INT-UCH acquisition as a move to gain control of AIS, the mobile operator.
Yeah.
So this amalgamation looks like the logical next step to really integrate and leverage that position in the telco market.
It really feels like they're building a major conglomerate across critical infrastructure sectors.
It does seem that way, very strategic positioning.
What about expanding power generation geographically? Are they looking beyond Thailand?
Oh, yes. They're planning more growth in Thailand, especially renewables like wind and solar, but also Vietnam, big potential there with rising electricity demand. And they've got that Jackson Generation gas plant in the U.S., too.
So international reach in their core business. And with Thailand's own gas supply declining, are they looking at LNG imports?
Definitely. They're actively developing their gas business, including getting into LNG importing. They have subsidiaries with the right licenses already. It's crucial for feeding their own power plants and maybe selling gas to others, too.
Makes strategic sense. And their role in the Eastern Economic Corridor, EEC.
They're investing in infrastructure there, too, particularly through public-private partnerships or PPPs. The Map Ta Phut port development is a key example. They're clearly committed to being part of that big national project.
Okay, and just quickly touching on other renewables, they have projects outside Thailand too, right?
Yes, quite significant ones. There's a huge 1,500 milliW wind farm being developed in the UK. Back in Thailand, they're growing their waste-to-energy capacity. And they have large hydro projects in Laos selling power back to Thailand.
A truly global portfolio then. What about sustainability goals? Carbon reduction, renewable mix.
They've set targets. Reduce Scope 1 carbon intensity by 25% by 2030 compared to 2019. Net zero Scope 1 and 2 emissions by 2050. And they want 40% of their total capacity to be renewable by 2035.
So clear commitments there, integrated into the strategy.
Seems so. It's becoming standard practice, but the targets are quite ambitious.
All right. So summing up the plans. GLF is pushing hard on renewables, diversifying heavily into digital, expanding geographically, securing its fuel supply, investing in national infrastructure, and setting clear ESG goals. Very dynamic.
Definitely a lot going on.
Now, let's bring in that external factor we mentioned, the meeting between GLF's Mr. Sarath Ratanavadi and former U.S. President Trump. How do we contextualize this?
Well, the articles we looked at put this in the frame of a hypothetical Trump visit to the Arabian Gulf during a second term. And that region, as the Carnegie pieces highlight, is dealing with a lot. Gaza, Yemen, tricky U.S.-Iran relations. It's a tense environment.
So in that kind of environment, why would a meeting like this happen? What's the interest for someone like Mr. Sarath?
In a situation with that much regional instability and potential shifts in U.S. policy, any major business leader, especially one with U.S. investments like GLF's Jackson Generation project or interest in the Middle East, would want to, get a read on the situation, understand the potential direction of U.S. policy under Trump, energy policy, investment attitudes. That's crucial information.
The articles also mentioned the dynamics around Israel normalization have changed since Trump's first term.
Right. The Saudi-Iran rapprochement, the Gaza situation, it's different now. Saudi Arabia, for instance, is sticking to the Arab Peace Initiative Palestinian statehood first. So any talks about alliances would likely be very different from the Abraham Accords push.
And there was uncertainty about who'd even be shaping Trump's Middle East policy.
Exactly. That lack of clarity is a big deal. Who are the key advisors? What are their views? For a company like GULF, figuring that out is vital for assessing risks and opportunities for their U.S. investments or any potential partnerships involving the U.S. or the Middle East. It's about strategic foresight.
So you could see this meeting as GOF's leadership trying to get ahead of the curve, basically, understanding potential policy shifts that could really affect their business.
Precisely. As one of the articles pointed out, countries, and by extension influential companies, learned during Trump's first term how important it is to, let's say, stay engaged with the U.S. administration. We don't know the specifics of this hypothetical meeting, of course, but it suggests a proactive approach to managing geopolitical risk and opportunity.
It definitely adds a whole other dimension to GULF's strategy, doesn't it? It's not just about markets and technology.
Absolutely. It shows high-level geopolitical engagement, recognizing that who holds power and what their policies might be can significantly shape the business environment they operate in.
Okay, let's try and wrap this deep dive up then. We've seen GOLF showing solid recent results financially.
Yep. Revenue growth, managed debt.
And they've got these really ambitious plans, expanding energy, huge push into digital, logistics, all underpinned by renewables and sustainability targets.
Very diversified, very forward-looking.
And then there's this layer of strategic engagement at the highest political levels, like the potential Trump meeting, suggesting they're actively navigating geopolitical currents too.
It paints a picture of a company operating in a really complex space, tech disruption, energy transition, global politics, and making some bold moves. They're definitely positioning themselves as a major player.
Which leads us to our final thought for you, the listener. When you look at all these pieces, the diverse investments, the digital pivot, the renewable focus, the high-level engagement, how do you see GOLF's role evolving, both in Thailand and maybe internationally? Especially with technology changing so fast and global power dynamics always shifting.
Yeah, and what other factors, maybe things we didn't even touch on today, could really influence where GOLF goes next? It's definitely a fascinating company to keep an eye on.